What's good, y'all? It's Joel, and I'm coming at y'all with another video. So this video, this is gonna be the NAS100 recap for July 4th. So if you look at the uh, Forex Factory um, event calendar, of course, July 4th. It's an American holiday, right? 4th of July. So it was a bank holiday. So in this day, I wouldn't be trading, nor would I be trading for the rest of this week. But I do want to provide you guys with as much content as possible to essentially give you a daily review as far as like how my strategy functions. So you can see why some days I trade versus some days I don't. And of course, the bank holidays are these are days that I just don't trade. Um, but we can still review the actual day itself so you can get a better understanding why. So jumping right in, uh, before we before we jump in, just yesterday I dropped a great video recapping Monday, July 3rd, which resulted in a winning trade. So if you didn't watch that video, I highly recommend you go back and watch that video. There's a lot of gems that I gave you guys there. As far as this video, we'll jump right in, and I want to keep it brief as far as like my strategy, so I don't have to give a full breakdown every single time. I do plan on doing like more extensive videos in the future explaining the strategy like more in depth, but I just want these to be more of like more quick like overview recap videos, so you guys can have a general understanding as far as like what's been going on. Um, First things first, of course, I have my calendar set to New York time. Um, and beginning at 8:30, so this candle right here is the 8:15 to 8:30 candle. So once we see this candle form, we look to the left to find the most recent swing high and swing low that still remain intact. So here, this swing high here is our buy side liquidity, just because this candle here, right to the right and to the left of it, are both shorter or lower, making this a swing high. So it's our buy side liquidity. And for our sell side liquidity, it is this level right here, this candle here. See this candle to the left and to the right of it are both uh, higher than it, right? Making a V or a U, right? So this is our sell side liquidity. This is the most obvious swing low um, prior to 8:30. I like to find something within the green shaded, which is the London session. So here we go. So now begin at 8:30. We'll jump right into the 1 minute time frame. So beginning at 8:30, this is when we can expect the hunt to begin, where the algorithm begins working towards and hopefully eventually attacking and purging each of the liquidity pools. Sometimes it might do one, sometimes it might do both, or it might do none at all. But 8:30 is a time where we can expect it to begin doing that. So beginning at 8:30, we'll just, you know, keep populating each of the candles. So no big deal if it doesn't grab any of the liquidity, um, because that's what we also have the 9:30 open for as well. So 9:30 is a super important time for the stocks for NAS because it's a stock, right? 9:30 is the New York Stock Exchange open. So this vertical line, this is the 9:30 mark, so you guys can have that there, and I also put a vertical line for 8:30. So we'll just continue on. Since it's getting super close to buy side liquidity, I want to have this highlighted for you guys. Boom. So here, this candle is what pushed into the buy side liquidity and purged it. So the reason why this is the buy side liquidity is that there are buy stops sitting up here. So when price came up here, any traders who had buy stops set here, meaning that if price goes above this level, that they'll automatically be thrusted into a buy position. Same with breakout traders, right? When price breaks at this level, breakout traders are jumping in with buy position because they expect price to continue pushing higher. But the way we see the market, we just see this as liquidity, right? These are where the orders are resting, and the market more likely than not is usually just looking to push into it to activate the orders and then push price in the opposite direction. So in this case, right, this 9:22 candle, 9:22 a.m. candle pushed into it into buy side liquidity, and the last structure point is at this level right here, right? Because we are seeing an obvious swing low. So I just marked that with the light bulb. And I will essentially keep moving this light bulb. If price keeps digging higher and higher, I'll keep moving this light bulb into the structure points that continue forming to see if we get a break of structure. And we'll keep going to see what happens after 9:30. So I don't take any trades before 9:30. And in this case, because price push into the buy side liquidity, once 9:30 hits, I would like to see 9:30 push even higher, clearing out whatever high was formed before 9:30, before breaking structure and leaving a fair value gap. So we'll just keep going here. Oops. So this is the 9:30 candle. So this large uh, bullish candle here is the 9:30 open, right? So technically here, this 9:30 candle came up and cleared this high, and it left an obvious swing low, right? So this would be my last structure point that I would like to see get broken if it chooses to push down or if it continues higher. So we'll just see what happens, right? So this candle up here, this is the candle that now took out the highs up here, right? So where is the last obvious structure point? Right here, this swing low. It's because the candle to the left and the candle to the right are higher, right? It makes a U or a V. So this is the last structure point. Not this one, right? This is the last structure point because this is the last swing low before um, the high got cleared. So now at this point, I would like to see a break of structure. If it delivers a break of structure, it would have to break under this level, and then it would have to deliver a fair value gap within this range of the displacement low to the displacement high. So we'll keep fast forwarding it. All right, so it almost broke it, right? But these are like equal lows right now. And then boom, price breaks. So now at this point, is there a fair value gap within the displacement range? Right? Obviously not. There's just, all the bodies of the candles are covered by wicks. So there's really no entry for me to take whatsoever. Now, in a situation like this, the only way for me to consider an entry again is if price comes back up and clears this high, right? I want to see price come up, clear this high again, and then deliver a breakout structure with displacement, which displacement just means an aggressive candle. So this candle here, this candle has displacement because this candle is a very beefy bullish candle, right? We want to see that, but bearish, but for a bearish candle and also leave a gap. So now if we continue on, right, there's literally nothing for us to do. We're just gonna sit on our hands, right? Absolutely no trade for us to take. We would need for price to at least push up, clear this high before we even consider wanting to take a trade. At this point, there's nothing for us to do, right? Now we see a candle that's like very aggressive that has displacement, but remember, it needed to be within our range of the displacement low and the displacement high, which in this case, right, this gap, right, like this gap right here, it did not fall within our range. So I'll just highlight this displacement range in pink, right? This gap did not fall within this range, so there's still really no trade for us to take. And if we just continue going on, right, we see price continue going down. Of course, it comes up and, taps into this fair value gap here. But once again, we're super strict with our rules because our rules when it comes to trading, our rules is what's going to allow us to be successful in this marketplace because there's so many variables at play, but we want to be as strict to our rules as possible, right? Because that's what allows us to filter for the highest probable setups and only take those. I'm not interested in um, taking any regular setup that the market just throws at me, right? It's like if your trading plan is as consistent as possible, that is what will set you up for success in a market where there's just a lot of variables at play and um, things can go wrong if you're not consistent with your strategy, right? So you want to follow your strategy to the T as much as you can. So this point, I wouldn't even take this trade. But once again, right, there's a bank holiday, so I'm literally not even like I don't even turn on like I don't even open up TradingView. Like I'm not behind the computer for bank holidays. I don't even check the charts. Like if I want to, I guess I can check the charts like after the day ended, but I'm not actively behind the computer screen looking to take a trade because usually for these bank holiday days, either I don't get either the confirmations don't deliver or like I don't get an entry or like the market just moves funny. So it's really no point trying to force a setup on, sort of a low probability day. Like typically people that trade on holidays are essentially almost gambling their accounts, those positions because um, it's just not a highly probable day to trade. So I personally just don't risk it. Um, so here, if we continue moving on, right, you see prices just melting, melting, melting. And then as we continue on, right, even throughout the day, price retrace a little bit, but then it ultimately go down and essentially it'll take the sell side liquidity. So boom, right there, takes it. So you guys are seeing it for yourself. Why I don't trade on bank holidays, right? Because more often than not, either the market really doesn't do much, like it'll just consolidate, or it can have some action, which here, right, everything was going according to plan, but even with like a break of structure, it did have a fair value gap, but it didn't, the fair value gap was not formed within the displacement range that I'm looking for. So in that case, there wouldn't be a trade, and price never came back up to sweep these highs again to then deliver another break of structure and a fair value gap within the range in order for me to take a trade. So, of course, I wouldn't have been trading on this day anyways, but if I was, this would have been a non-trading day. But as you guys can see, right, price came above, swept the buy side liquidity, activated all these orders, and then shifted bearishly and started taking price lower, lower, lower until it ultimately purrs the sell side liquidity. So this is just another great example showing that in back-to-back days, you're seeing what the market is doing, like the true colors of the market, that the market is pretty much interested in either liquidity or inefficiencies, and it's gonna go for both of those, right? So same with the video that I posted yesterday, for the recap for July 3rd. That day it showed price also dug into buy side liquidity before breaking structure, leaving a fair value gap, and then traveling all the way down to sell side liquidity. And you can see the market did the same the next day as well, even on the bank holiday, right? Price pushed up, attacked buy side liquidity, and then broke down and then went after sell side liquidity. So this is how the market is. This is how it operates. The game is about orders. The game is about liquidity. The same way that you and I are in this market looking to make money is the same way that the banks are running the market, right? Like that's their intention as well. They didn't create this market for you and I to win and to profit, and no, like it was made for the big banks, the people in charge, to be able to have another source of income, right? For the foreseeable future. For this market is gonna exist for well beyond you and I, right? Like this market is gonna continue for forever, right? So, um, this is what happens virtually every single day. The market is just going after liquidity, and um, it's a major paradigm shift. If you're an aspiring trader, you're learning, you're studying this material, right? For you to see this, so that you can begin shifting your mindset, and when you see price pushing up into buy side liquidity, you should automatically be thinking sell, right? You should be thinking um to look for a sell opportunity if the market presents it to you, as opposed to buying, right? Because you're seeing price go higher. Most traders are thinking, oh, buy, 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 price is going higher, when in actuality the market is pretty much pushing price above there so it can activate the buy orders, which can serve as a counterpart for the market to push the sell orders. That's why once you see the price push up like this, you're seeing aggressive selling aggressive selling, right? Aggressive selling, because the market is going after the opposing liquidity pool as well. It's looking to activate both sides. And, if the market has the sell orders going down, pushing price down, which is the perfect counterpart for the buy orders, right? Is pushing price down to then arrive at the sell side liquidity, which is where they can close their positions, right? So that's why a lot of times when we have the liquidity pool marked up, you'll see price slash right through it, and then it'll generally consolidate, which is like what you're seeing here to a degree, right? It's moving a bit, but um, it's not uncommon for price to, once it taps into the other liquidity pool, for it to just start consolidating, and then it's just not really moving anywhere. So I'll just leave it at that. Hopefully you found this helpful. Hopefully now you understand why I personally don't trade on bank holidays. I just literally take the day off. I don't even open the charts because I know more often than not there's not really going to be a setup. And if there is, it's usually doesn't look how I want it to. So it's best to avoid it entirely and just show up the next time you have an opportunity to take a trade. So if you found this helpful, please leave a like, subscribe, comment any questions you may have. I'm always looking to read people's comments and answer any questions if there's anything unclear, right? I want to provide content that's helpful to you guys and help anyone who's a young aspiring trader that wants to learn how to trade NAS. And as a reminder, NAS, even though I trade this with a forex broker, this can also be used to be traded with a stockbroker. So if you're someone who's also learning how to trade stocks, this is a phenomenal opportunity to learn how to trade this pair and to use the information that I'm giving you to, take it with you and really study this on your end so you can begin seeing what I'm seeing. And, now it's just like I can't see the market any other way but through the lens of liquidity because I'm now a firm believer that this is what's actually happening in the marketplace. And um, if you understand the game that's being played, right, you can capitalize on it, right? You can have uh, confidence in the trades that you're taking and have belief that this is what's going on. So, um, if you found this helpful, once again, do leave a like, subscribe, share this with anyone you think would also benefit from this. We're going for our very ambitious goal of 100 subscribers. So any support is all appreciated. Thank you so much for watching. If you made it this far, this is Joel once again, and I'm out. Peace.